Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Stocks had a great session until the very end. Amazon and Google missed earnings, and this is likely to drag on risk sentiment in the currencies as well as other markets overnight and into tomorrow. What you want to see here, though, is the dollar index did stay below that August high as the euro battles against that August low. So watch for that level. If that euro goes, you could start to see extra volatility in the markets. Early this morning, the ECB left policy unchanged. That was expected. It was all about Draghi's press conference. He wasn't going to rattle things much. He was upbeat on inflation and wage growth, and you saw the euro respond higher initially. However, this dissipated as his comments on Italy and the overall situation with Italy's budget continues to drag the euro lower. So right now, we're finishing on the lows of the session. It's been a very poor week for the euro. What does it do here against major three-star support at that August low is going to be critical for risk sentiment too. So watch that. And then the dollar index, the upside. We know that the dollar has been a bit of a safe haven this year. Watch that level from that August high in the dollar index. You don't want to see it get out above there, and especially not close out above there. But tomorrow we do have the GDP, the first read from quarter three, coming out at 7:30 a.m. Central Time for the U.S. Watch that number. It's going to be critical what the dollar does and how it finishes the week. More importantly, we did hear new Vice Chair Clarida today. He really kept that same tone that that we've heard from other Fed members. The interest rates should be hiked gradually. He did say he did at least sound a little more data dependent, and I think that was important. But there might have been a little bit of emphasis waiting for him. I know we put a lot of emphasis on him to potentially be dovish, and the fact that he wasn't dovish, more dovish than really expected. The dollar did not respond lower, but the data dependence is really what's going to be important. We need to see that inflation. We got to remember here, CPI over the last 2 months has missed expectations. We're really not seeing that inflation, and the Fed's getting very hawkish out in front of that, which is very surprising. Look at commodity prices; inflation's not there. So that's the real question here. How can the Fed be so hawkish without that inflation? Maybe Clarida, as we hear more from him in the coming weeks and months, could be a little bit of a breath of fresh air as if he stays a little more on the data-dependent comments. Now, with the equity market selling off at the end of the day, you want to watch the yen. The yen does have major three-star support that we've had in the FX Rundown right up on Monday and Tuesday, just around the 89 level. Watch that. If it gets below there, if the equity markets recover, if it gets below there, you can start to see accelerated selling. But if we see the weakness in the equity markets, the yen could move back up and continue to build a constructive pattern off of that major three-star support. So watch for that. The Canadian dollar did give up all of its gains from yesterday. We did comment in yesterday's video too that the Canadian dollar left a tail. That was important to see, and it's right back down. Looks like it could set up for a poor finish on the week. You do not want to see that trend line get taken out, but keep an eye on that there. If the stocks continue to put pressure or see pressure overnight, you can see pressure on the Canadian dollar as well as the Aussie. The Aussie is battling against that lowest level since February of 2016, and it's all about risk sentiment for those two currencies. Give us a call. We're here to talk about anything on the board. 312-278-0500. Email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.